Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, February 15th. Big explosive move to the upside. Janet Yellen speaking that they are going to raise rates maybe 2, maybe 3 times this year. Now, she didn't absolutely say that, but she said probably at least March and June they're going to raise rates. Market didn't like it in the beginning, and then all of a sudden the market's rallied yet again. Unbelievable. Can we say parabolic move higher? That's exactly what's happening. That's exactly what's to be on a fifth wave and last wave of this big bull market run. Now, we painted 2 scenarios. We said we have some big inflationary data coming out this morning. Apologize. So that could definitely swing the markets either higher or lower. And again, it's not the number. It depends on how the market participants react to the number. So let's see what happens. You know, the Trump trade with inflationary targets are big for Donald Trump itself, because that's what he was campaigning. Now, we had some inflationary data to come out yesterday, and it was hot. So let's see what happens, guys. I mean, it's going to be a crazy one. And I got to tell you, with absolutely no volume. Now, we had some volume today, but you understand what I'm talking about. Light volume for the last, I don't even know how many sessions, or even you can go back years, since 2009. And that's also a lot to do with dark pool activity. But nonetheless, there's still, traders and investors and swing traders and market participants looking and still buying. They're buying at the highs and they're buying at the top. And VIX is right in front of you, and I'm going to show you a few charts today at extreme lows, most heavily shorted ever since the index has been created. And it goes on week after week after week that the producers that need to short VIX is getting shorter and shorter and shorter by the week. Be careful, because volatility is about to explode. We don't know when, right? And if anybody says, I know when, then you better run fast, run far away from them. But it's about to explode, and it's about to happen. And I laid out a little bit of a timeline, and I'll show that to you on a 60-minute chart. We'll do that again. But let's take a look. You can see here, we're very close for the VIX to explode to the upside. Now, remember, we have the pinching of the Bollinger Bands. We're at historic lows. And I remember 1957. If you remember, I mentioned back in 2007 we were at 927. Okay, that's in 2007. It's almost 10-year lows. And I think before 2007 we haven't seen 927 in quite some time. So this is not something that for the day trader, but and also it is for the day trader, meaning that anything can happen during the day. And if that does happen, yes, we do need confirmation that we're headed lower. I think the market's in a topping phase, and I think the markets are about to top. I have not called the top yet. I will not call a top yet until I get a sell trigger, and that's based off our TMT model. But it is ready. It's just about ready to call a top, and I'll show that to you in a moment. Now, as you know, we had the VXX we used to like to trade a lot, but obviously this is a deteriorating asset. We have a lot of contango issues, but this also coming from November of 2020, let's say $32 at the high on the close before the evening of Donald Trump of 36,737, and now it's 1667. And then let me show you the XIV, which is the short at all-time highs, parabolic outside of the Bollinger Band. And remember, guys, this was at $18, $15 back in November. Back in the summer, it was $20. And in November, it was at $32. It more than doubled its move every single day. If this is not parabolic, and what does that mean is be very careful. I would not be buying shorting volatility. I'd be buying volatility on any huge dips, because at one point in time this is absolutely non-sustainable. That's one thing that I will tell you for certain, that this move, as well as the equity markets, is unsustainable. Okay, we are looking for a pullback, and a pullback could be easily to the 21 SMA, EMA, but it is unsustainable. Okay, that's all I want to say to you guys. Let's use our heads. Let's not be crazy. Remember, that's what Mr. Market wants you to believe, that we're going to 3,000 in the S&P by the summer, 30,000 by the Dow in the summer. That's what the market wants you to believe. Okay, markets are made to fool the masses. Now, there's no doubt about it that I'm looking to buy pullbacks or short weak stocks intraday. But I'm more than likely, if I do not get a high probability index trade, then I'd be looking to short, a weak stock or buy a strong stock and stay away from the index because it's just not giving it to us. UUP, you see now, as well as inflationary data that came out. We had a hawkish Fed. Boom, there goes new life to the dollar. Remember, guys, I've been saying it from here. Don't count the dollar out. Look back on my videos. It's right here. I remember saying this. This is going back way, way, way back in the early fall. Don't count the dollar out. I said it here, and I said it here, and look what's happening. Now we're going to be rising down. Now, if we get a real strong dollar, that's also going to affect equities. All right, and as well, it'll affect the commodity squadron, right? GDX, inverted head and shoulders, holding nicely the neckline. So this proves to be the neckline, right? When you have 1, 2, 3, 4, 5, 6 days closing above the neckline, touching the neckline to the penny and not breaking down. So this is what we want to see here, and we want to see GDX hold. Remember, the dollar and gold, at one point, they were inversely correlated, but when you have a lot of fear in the markets, the dollar is a park for dollars, right, for someone's wealth, as a safe haven play, as well as gold. So they'll act in sync. They'll be correlated at one point in time. GLD, same thing, right? Holding steady. Here are rates. We have a nice symmetrical triangle at the upper end of the range. And as we all know, symmetrical triangles are what? Continuation patterns, right? So you could see how strong rates are, guys. At 38% retracement, we haven't even gotten down there. And doesn't this look like a head and shoulders pattern? Absolutely does. It does look like this is the neckline at 2.36, but it looks like to me it's breaking out. And if this does break out, TLT, this cup and handle is going to be a bust. All right, we lose this, this will be a bust. We lose this, 116.83. Look for much lower prices in bonds. Okay, remember the USB I showed you at 148. That's the weekly 200-week bar moving average. If we lose that on a closing basis, then I'd say look out below. Bonds are going to crash. That will also affect equities. You want a gradual move in bonds. You do not or never want to see a crash in the bond market, okay? Remember, they're the smartest guys in the room. All right, daily chart of spiders touching the upper end of this big bearish rising wedge. Let me show you the 60-minute. Here is the uptrend channel, 5 waves, and I mentioned this. Is this the 5th wave, or we're going to get microwaves in between and then blow up to the 5th wave? But let me show you what I showed you earlier this week. All right, here is our basically our timeline target. We're almost there now. Probably tomorrow we'll get there. We said 236 to 240. Okay, we'll tighten up the range once we get closer. I think it tags it and it rides the rail. Right around here, 238, 240, anywhere around here. I think this market is done. That's what I'm looking at. That's what it's telling me. Unless something crazy happens, that the market has renounced strength, and everything else and all the indicators that we look at and all of the price action is pointing to higher prices, then I would say something otherwise. But right now, this is what's going on. We were looking for a pullback. Possibly could still happen. We do have 3 more days of trading, maybe down to here, and then pull back and then rally back one more time, like to really have an unbelievable rally where the shorts try to short one more time and the perma bears throw the towel in and squeeze this market even higher. And that's what's happening, guys. I mean, really, there's no fundamental reason at all to buy this market for the longer term, guys. For the day traders, one thing, but there is absolutely no reason to buy this market. Very expensive. There's no discount to buying stocks. So again, at one point in time, reality will set in and catch up to what the markets are doing. Remember, the Trump rally is on anticipation of what he's doing. Okay? This rally is on anticipation of what his tax cut plan is going to be. No one knows this. It's absolutely insane to front run this type of possible news and not know what it is. And God forbid that the markets do not like his Trump plan. You're going to have a free for all because there's everybody one sided. And I'm telling you, do not listen to the pundits. Do not listen to me. Do your own homework. Make sure that your analysis fits with what you're doing during the trading day. I am telling you, I've seen this before. The markets at one point in time will give way. And not only did they mention $20 trillion in the stock market for Donald Trump, that'll be wiped out in a matter of months. And that always happens. Do the homework. Do your historical homework on the 1929 crash, the 1987 crash, the 2000 crash, the 2009 crash. Very similar. In particular, 29 and the 87 crash is setting up just beautifully for what's going to happen down the road. Again, timing is one thing we don't know. Okay, but you could see the IWM clearly lagging now, but still looking for a breakout and could break out tomorrow. Transport's lagging to the S&P, but again, still could break out tomorrow. And then, of course, you have your Qs that broke out. Again, can you say parabolic? This is exactly what's happening. Last move, last wave of this 2009 bull run. Once this is completed, we will start a corrective phase, which will turn into a full-blown correction of anywhere from 10 to 20%. And it could get even uglier because there are so many people buying stocks at these lofty levels. Keep an eye on, keep your ear out when you go shopping, when you go to a dinner. Find yourself and jot down how many people are talking about the stock market. All right, that is a giveaway that the markets are almost ready to be to really start to sell off. We'll see. And again, not calling a top yet. All I'm saying for the swing trader and the long-term investor, be prudent. And if you really want to hold through this, make sure you protect yourself. Have a great day, everybody. We'll see you later.